You are staring at screens at 3 in the morning. Overlapping time zones are active, but the candlesticks are blurring into a wall of noise. You hesitate on a textbook GBP/JPY short that you planned out hours ago. You watch the price drop without you. And then, in a rush of frustration, you jump into a random long position just to try and make the money back. Every trader manages 2 distinct portfolios at the same time. This chart shows your financial capital, the actual money in your account. The second parallel line is your psychological capital, measuring focus and emotional resilience. A simultaneous crash in this mental clarity is a margin call on the mind, the definition of Forex burnout. When psychological capital runs dry, your ability to execute a proven strategy vanishes. Logic shuts down, replaced by purely emotional reactions. Cognitive symptoms hit first. You experience sudden decision paralysis on setups that meet all your criteria. Later, out of boredom or a desperate need for revenge, you force erratic, impulsive entries. Then the physical toll sets in. Sleep becomes fragmented, you feel numb to wins, and painful losses stop stinging. You just feel a deep apathy mixed with constant irritability. Ignoring these physiological warning signs guarantees that your mental exhaustion will eventually bankrupt your financial account. The Forex market operates 24 hours a day, 5 days a week. It rolls from the Asian session directly into London and then into New York, creating a relentless grind. The fear of missing out is powerful. It compels traders to stay glued to their screens for hours, severely disrupting their natural sleep patterns. Clinical sleep deprivation directly degrades the prefrontal cortex, the specific part of your brain responsible for making rational, high-stakes judgments. Leverage acts as the ultimate psychological stress multiplier in this environment. Holding a highly leveraged position generates a background hum of chronic anxiety. You know that a tiny market move could trigger a devastating margin call. Then there is the information overload. Endless breaking news alerts, conflicting technical indicators, and social media feeds flexing massive profits all fight for your limited attention. This combination of endless market hours, extreme leverage, and massive data overload makes retail Forex traders uniquely vulnerable to rapid psychological burnout. The moment you notice your financial equity curve dipping, you have to run a vital diagnostic test to figure out what is failing. On the left side is a drawdown, a strategy problem. Your mind remains clear to rationally review data and make tactical tweaks. On the right side is burnout, a you problem. It's a hardware failure where you actively break rules and make unforced errors. Applying a new trading strategy to solve burnout is useless. You must fix your psychological hardware before you can successfully run any software. When you diagnose burnout, you cannot push through it. You must initiate an immediate emergency protocol, a mandatory 48 to 72-hour hard reset. A hard reset requires closing the trading platform, deleting the broker apps from your phone, and enforcing a total blackout on all financial news. After a full 24 hours away from the charts, sit down for 30 minutes to review your trading journal. The rule here is that you do not look at pips or price action. Instead, audit your own emotional notes. Look for phrases like felt rushed or traded out of boredom. Replace your usual chart time with physical activity or completely unrelated hobbies to remind your brain that a world exists outside of the market. Identifying the emotional triggers that caused your unforced errors is the foundational step to rebooting your psychological capital. Once you recover, you have to build long-term defensive routines so that mental capital doesn't drain back to zero. Start with a pre-market shield. Spend 15 minutes reviewing your rules and setting your goals before a single chart is ever opened. Next, implement scheduled physical breaks. Use the Pomodoro technique to step completely away from the screen every 50 minutes to let your nervous system reset. The ultimate secret to preventing burnout lies in position sizing. It functions as a psychological shield as much as a financial safeguard. On the left, risking just 1% of your account makes a loss a manageable business expense. Your mind stays calm and rational. But risking 10% turns that same market loss into a personal disaster, triggering the stress and anxiety that leads directly back to burnout. Excellent risk management simultaneously protects your financial capital and fiercely guards your psychological well-being. Build a resilient trading routine today. Explore FXNX's resources to protect your mental edge.